Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the money world and sometimes uncover a few secrets. Today we are diving deep into a financial report from Marwynn Holdings Incorporated, a company that seems to be shifting gears quite a bit. This is their quarterly report giving us a snapshot of how they're doing financially for the period ending the 31st of October 2025. Now, usually these reports can be a bit dry, but Marwynn has some interesting moves happening, including selling off a whole business. So let's see what the numbers tell us about their game plan and whether it's working. Before we start, if you appreciate getting straight insights from corporate documents like this, make sure you are subscribed. We also have a Discord community linked in the description below where we discuss these filings and more. Marwynn Holdings Incorporated is the company in question. They operate in supply chain management solutions. Now, they've been busy. A major development is their decision to sell off Grand Forest Cabinetry Inc. This is a big deal because it means they are really changing the focus of their business. They are essentially streamlining their operations, getting rid of a part of the business that might not be fitting their long-term vision anymore. Let's look at their balance sheet, which shows their assets, liabilities, and equity as of the 31st of October 2025 and the 30th of April 2025. One of the first things you notice is the decrease in total assets from about $14.9 million to $12.3 million. This significant drop is largely due to the planned disposal of Grand Forest. They have assets held for sale, and that is a substantial chunk of what they're trying to get rid of. This sale is a strategic move aiming to improve efficiency and profitability. Now, let's talk about their income statement, which shows their revenues and expenses. For the 3 months ending the 31st of October 2025, their total revenue was $43,750. This stayed the same compared to the same period in 2024. However, their net loss for these 3 months was a hefty $896,287. That is a big jump from a net loss of $114,371 in the previous year. The main driver here is the net income loss from discontinued operations, where they reported a loss of $565,515 in 2025, compared to a gain of $133,687 in 2024. During the same period, this indicates that the business they are selling, Grand Forest, is not only being divested, but is also dragging down their overall financial performance in the short term. The cash flow statement is crucial for understanding where the money is coming from and where it is going. For the 6 months ending the 31st of October 2025, their net cash used in operating activities from continuing operations was $486,753. They also had a significant cash inflow from financing activities from continuing operations, totaling $1607213. This inflow mainly came from issuing common stock, which suggests they raised capital through selling shares to fund their operations. Especially after the IPO, they also saw a large increase in their cash balance, from about $1.26 million at the beginning of the period to $1.53 million by the end. This boost in cash is likely a combination of their recent stock offering and the funds they are holding related to the Grand Forest sale. Digging into the notes, we learn more about the business. Marwynn is a holding company, and its main operations are through subsidiaries like Fawn Enterprise Inc., which focuses on food and beverage supply chain and brand management, and Grand Forest Cabinetry Inc., which is the business they are selling. The decision to sell Grand Forest is a key strategic pivot. They are aiming to focus on their supply chain consulting and the food and beverage distribution business. This section really highlights the biggest news. Marwynn has committed to selling Grand Forest. They entered into an agreement to sell all of its shares for $550,000. While the deal was not closed as of the 31st of October 2025, they had to recognize an impairment loss of $413,512 because the value of assets held for sale dropped. This is a classic accounting move when a company officially plans to sell an asset or a whole business. It is a way to write down the value to reflect what they expect to get from the sale. A significant event for Marwynn was its initial public offering, or IPO, in March 2025. They issued and sold shares at $4 each, raising about $7.16 million in net proceeds after expenses. This IPO is a massive step for any company, providing capital and also bringing significant new costs and scrutiny. They even had an over-allotment option, meaning the underwriter bought more shares, bringing in another $184,000. This infusion of cash is clearly helping them manage their liquidity. This is a critical part of any financial report, and for Marwynn, it is especially important. The report states that the company's recent losses and cash outflows from operations raise substantial doubt about the company's ability to continue as a going concern within 1 year. This is a serious statement. meaning there is a real risk the company might not be able to stay in business if things don't improve significantly. Their plan to deal with this includes diversifying revenue streams for Fawn and maximizing the efficiency of their remaining consulting business. They have cash on hand, but they might need more if business conditions change or if they pursue new opportunities. They are open to issuing more debt or equity if needed. This note elaborates further on the Grand Forest sale. They confirmed that Grand Forest meets the criteria for held for sale and discontinued operations. This means all financial results from Grand Forest are now separated in the financial statements. This is done to give a clearer picture of the ongoing business's performance versus the business that is being sold off. The impairment loss of $413,512 is detailed here, showing how much they had to reduce the carrying value of Grand Forest assets. Marwynn derives revenue from two main areas: food and beverage sales and consulting services. However, the numbers show a stark change in their revenue streams. For the 3 and 6 months ending the 31st of October 2025, revenue from food and beverage sales was zero. This is a massive shift from the previous year when sales of food and beverage were a significant part of their revenue. They explicitly state they are seeking new retailers and working on products less affected by trade tensions. This revenue shift means their consulting services now make up 100% of their revenue from continuing operations. This is a critical strategic move, but it also concentrates their revenue sources. Under other information, we find important details. This section is always a goldmine for understanding potential threats. For Marwynn, the risks associated with the Grand Forest disposal transaction are front and center. They warn that the announcement and pendency of the sale could negatively affect their business, relationships with customers, suppliers, and employees. They also highlight that the transaction might not even be completed if conditions aren't met, which could also hurt their stock price. A key point here is that the company's stockholders will not receive the proceeds from the sale. Instead, the company itself will, and the board has broad discretion on how to use that money, which is always a point of concern for investors. This is a serious risk mentioned. After selling off Grand Forest, their business operations will be significantly curtailed, and their revenue sources will be limited to their food supply chain business. They also acknowledge that they will continue to bear the expenses of being a public company even with reduced operations. Furthermore, they specifically mention the risk of being delisted from the Nasdaq if they fail to meet continued listing requirements, such as maintaining a minimum bid price and having a sufficient number of stockholders and publicly held shares. This is a major concern for liquidity and investor confidence. This section details a stock purchase agreement closed on the 28th of October 2025, where they sold over 3.1 million shares of common stock at $0.45 per S-share, raising about $1.4 million. This is a private placement, meaning it was not a public offering like their IPO. This is likely a way to bring in more capital to shore up their finances. Regarding the IPO proceeds from March 2025, they state there has been no material change in their planned use, which was to develop their supply chain management system and expand sales channels. Under other information, they confirm no Rule 10b5-1 trading arrangements were adopted or terminated by directors or officers. The exhibits list the formal agreements related to the Grand Forest sale and the stock purchase. Now, let's put on our Warren Buffett hat and look at the bigger picture here. Marwynn Holdings is clearly in a period of significant transition. The sale of Grand Forest is a bold move designed to refocus the company. However, it also leaves them with a much smaller operational footprint and revenue base heavily reliant on their consulting services. This is a double-edged sword. On one hand, it shows decisiveness. On the other, it concentrates risk and raises questions about future growth potential and their ability to meet listing requirements. The financial results show a company struggling with profitability, especially with the continued operations hit by increased operating expenses like professional fees and insurance, which are common for public companies. The food and beverage sales have completely disappeared, which is a huge gap to fill. This makes their reliance on consulting services, which has seen a slight dip in revenue, quite precarious. The fact that they are raising capital through both an IPO and subsequent private placements indicates a need for funds, which is understandable given the losses and the strategic shifts. The risk factors are substantial, particularly the potential delisting from Nasdaq and the ongoing doubt about their ability to continue as a going concern. This means investors need to be very aware of the potential for significant financial distress. In conclusion, Marwynn Holdings is betting big on its supply chain consulting and a renewed focus on its food and beverage distribution, while shedding its home improvement business. The immediate financial picture is challenging, marked by losses and a shrinking revenue base from core operations. offset somewhat by recent capital raises. Their ability to execute their strategy, diversify revenue, and manage costs will be critical for survival and future success. It's a high-risk, high-reward situation, and seasoned investors will be watching closely to see if they can navigate these turbulent waters. Alright, that is our breakdown of Marwynn Holdings' latest filing. What is your take on these numbers and what they signal for the company's future? Do you think selling Grand Forest was the right move? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps us out, and subscribe for more deep dives into corporate filings. Don't forget to join our Discord community linked in the description for more discussions. Thanks for watching, and we'll see you in the next video.